Hey everyone, PepsiCo reported 2023 second quarter earnings results that impressed stock market investors, including myself. In this video, I will provide a brief overview of Pepsi's latest quarterly results, as well as update my recommendation for Pepsi stock. Heading into these earnings results, I had Pepsi stock recommended as a buy, so stay tuned to hear if I am changing that recommendation, upgrading it, or downgrading it towards the end of the video. But first, let's look at its results for the quarter. Total revenue increased by 10.4% to 22.3 billion. Earnings per share of $1.99 was a significant increase from $1.03 year over year. However, there was an impairment charge in the same quarter last year that decreased the earnings results last year, that made the comparison look better year over year, right? Because if there's a big charge last year, it made last year's earnings lower. And so when you compare this year's earnings with last year's earnings, it makes it look like it is here with a big increase. However, that big increase was a result of that big charge last year. If we exclude that impairment charge, operating income would have been 3.4 billion in Q2 last year compared to 3.6 billion in the second quarter this year. Okay, so still solid growth, 200 million increase in operating income during a very challenging time for Pepsi. Remember, Pepsi was a beneficiary of the pandemic. The company thrived because its snack segment benefited tremendously as people were spending more time at home and snacking more often. And so that was really good news for PepsiCo. As economies are reopening, that snack segment is not thriving as well as it was during the earlier stages of the pandemic. So the fact that Pepsi was able to increase operating income, increase revenue despite those headwinds was impressive. So how was Pepsi able to do that? Primarily with price increases. Net pricing increases totaled 15% in the second quarter. You may have noticed when you went to the supermarket to buy any of PepsiCo's products that they are a lot more expensive now than they were a year and a half, 2 years ago. Impressively, despite the fact that Pepsi increased prices by 15% on average across its portfolio, volume only fell by 2.5%. You remember the age-old relationship between prices and customer demand, right? As prices increase, demand decreases, right? When you see higher prices, you're less interested in buying the products. So there is that inverse relationship, but for Pepsi, this demonstrates its pricing power, the ability to raise prices without having customers say, no, thank you, we don't want to buy your products. That's the strong habitual relationship Pepsi has with its customers, and it was on full display here in 2023, not only in the second quarter, but Pepsi also did this in the first quarter of 2023. So that is truly impressive, and it demonstrates to me the long run stickiness of its pricing power, which I like to see in companies that I invest in. So, to update my recommendation on PepsiCo stock, I still rate the stock as a buy. I am not downgrading the stock. In fact, this quarter was excellent. So I'm keeping my buy recommendation on Pepsi stock right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.